Investing and trading, two terms that sound similar but couldn't be more different. If you've ever wondered whether you should be a trader or a long-term investor, this video is for you. Listen up because we're diving deep into the stock market, separating the myth from the moolah. We'll break down the key differences between these two approaches, and trust me, you'll want to stick around because by the end of this video, you'll know exactly which strategy fits you best. So, buckle up, get ready to ring the register, and let's make some freaking money. Alright, let's talk investing. Investing is all about going long, baby. We're talking about buying and holding assets for the long haul. Think years, even decades. Investors, they're not in it for the quick buck. They're playing the long game, looking for steady, sustainable growth over time. It's like planting a tree, folks. You nurture it, you give it time to grow, and eventually it bears fruit. That's investing. You're not going to get rich overnight, but you're building a solid foundation for your financial future. Investors, they're like Sherlock Holmes, always on the lookout for undervalued gems. They dig deep into a company's financials, analyze their business model, and assess their long-term growth potential. They're not swayed by every little market fluctuation. They're in it to win it for the long haul. Think of companies like Apple, Amazon, or Google. These behemoths weren't built in a day. They took years of innovation, strategic acquisitions, and a relentless focus on growth. That's what long-term investing is all about. Now let me tell you, there's nothing more satisfying than watching your investments compound over time. It's like magic, but instead of pulling a rabbit out of a hat, you're pulling profits out of the market. Remember, investing is a marathon, not a sprint. It requires patience, discipline, and a long-term vision. But trust me, the rewards can be absolutely life-changing. If you're the type of person who prefers a hands-off approach, who's not glued to the ticker tape every second of the day, then investing might just be your ticket to financial freedom. So, are you ready to build generational wealth? Are you ready to watch your money grow year after year? Then join me, and let's explore the exciting world of investing. Alright, let's talk trading. Trading is a whole different ballgame, folks. We're talking about buying and selling stocks frequently, sometimes within days, hours, even minutes. Traders, they're the adrenaline junkies of the financial world. They live for the thrill of the trade, the quick profits, the constant action. They're not afraid to take risks, to get in and out of positions quickly, to ride the waves of market volatility. It's like surfing, folks. You gotta read the waves, time your entry and exit perfectly, and be prepared for a bumpy ride. That's trading. You gotta be quick on your feet, have nerves of steel, and be able to make decisions in the blink of an eye. Traders, they're like technical wizards, always analyzing charts, patterns, and indicators. They're looking for short-term price movements, momentum shifts, and any opportunity to make a profit. They're not as concerned with a company's long-term prospects as they are with its short-term price action. They're looking for stocks that are moving, that are volatile, that have the potential for quick gains. Now let me tell you, trading is not for the faint of heart. It's a high-risk, high-reward game. You can make a killing one day and lose it all the next. It's not for everyone, but for those who have the stomach for it, it can be incredibly lucrative. Remember, trading requires discipline, risk management, and a deep understanding of technical analysis. You gotta know when to hold them, know when to fold them, and know when to walk away. If you're the type of person who thrives on excitement, who loves analyzing data, and who's not afraid to take risks, then trading might just be your calling. So, are you ready to ride the market roller coaster? Are you ready to experience the thrill of the trade? Then join me, and let's dive into the fast-paced world of trading. Whether you're a seasoned trader or just starting out, the world of trading offers endless opportunities and challenges. It's a journey of constant learning and adaptation. So buckle up, stay informed, and let's make some trades. Chapter 4. Key differences between investing and trading. Alright folks, let's break down the key differences between investing and trading. These two approaches to the financial markets are often confused, but they have distinct characteristics that set them apart. It's like comparing apples and oranges. Both are fruits, but they taste completely different, right? First up, time horizon. This is one of the most fundamental differences. Investors, they're playing the long game, remember? They're holding their investments for years, even decades. They're in it for the long haul, aiming to build wealth gradually over time. Traders, on the other hand, they're all about the short term. They're looking to capitalize on market fluctuations and make quick profits. They're in and out of positions quickly, sometimes within days, hours, even minutes. Next, risk level. This is another crucial aspect to consider. Investing is generally considered less risky than trading. This is because investors are more likely to ride out the market's ups and downs, rather than reacting to short-term volatility. Why? Because you're holding your investments for the long term, you're riding out the market's ups and downs. This long-term perspective can help mitigate the impact of short-term market fluctuations. Trading, on the other hand, is all about timing the market, and that's inherently risky. The potential for quick gains comes with the risk of significant losses. Investors, they're all about fundamentals. They're looking at the bigger picture, focusing on a company's long-term potential. They're digging deep into a company's financials, analyzing their business model, and assessing their long-term growth potential. This thorough research helps them make informed decisions. Traders, on the other hand, they're more focused on technical analysis. They're looking for patterns and signals that indicate short-term price movements. They're looking at charts, patterns, and indicators to identify short-term trading opportunities. This approach requires a keen eye and quick decision-making. Investors make money through capital appreciation and dividends. These are the two primary ways they see returns on their investments. Capital appreciation is simply the increase in the value of your investment over time. It's the growth in the value of the assets you hold. Dividends are payments made by companies to their shareholders, usually in the form of cash. They provide a steady income stream in addition to potential capital gains. Traders, on the other hand, make money from short-term price movements. They're looking to buy low, sell high, and pocket the difference. They buy low, sell high, and pocket the difference. This requires a lot of attention and quick reflexes to capitalize on market opportunities. So there you have it, folks. The key differences between investing and trading. Each has its own set of strategies, risks, and rewards. Understanding these differences can help you decide which approach aligns best with your financial goals. Now, which one is right for you? It's a personal decision that depends on various factors. That depends on your individual goals, risk tolerance, and time commitment. You need to assess what you're comfortable with and what you're aiming to achieve. If you're looking for long-term wealth growth, if you're not afraid to ride out the market's ups and downs, and if you prefer a hands-off approach, then investing might be the way to go. It's about patience and steady growth. But if you're looking for quick profits, if you're comfortable with higher risk, and if you enjoy the thrill of the trade, then trading might be more your style. It's about agility and seizing opportunities. The bottom line is this: there's no right or wrong answer. Both investing and trading have their merits and can be profitable if done correctly. It all depends on what you're comfortable with and what you're hoping to achieve. Make sure to do your research and choose the path that aligns with your financial aspirations. Chapter 4. Which one is right for you? Alright folks, we've covered a lot of ground today. We've talked about investing, we've talked about trading, and we've broken down the key differences between the two. Both have their own unique advantages and challenges. Now, the million-dollar question, which one is right for you? This is a decision that requires careful consideration. Well, the answer, my friend, is not so simple. It depends on a number of factors, including your financial goals, your risk tolerance, your time commitment, and your personality. Each of these elements plays a crucial role in determining the best path for you. Let's start with your financial goals. What are you hoping to achieve with your money? Are you looking for long-term growth or short-term gains? Are you saving for retirement? This is a common goal that requires a strategic approach. A down payment on a house, your kid's college education. These are significant milestones that need careful financial planning. Once you know what you're saving for, you can start to think about how much risk you're comfortable taking. Risk tolerance is a key factor in your decision-making process. If you're saving for retirement, you have a longer time horizon, which means you can afford to take on more risk. This allows for potentially higher returns over time. But if you're saving for a down payment on a house, you have a shorter time horizon, which means you'll want to be more conservative with your investments. Preserving your capital becomes more important. Next, consider your time commitment. How much time are you willing to spend managing your investments? This can greatly influence your choice. If you're a busy professional with a family, you probably don't have a lot of free time to devote to stock picking and market analysis. Your schedule might demand a more passive investment strategy, but if you're retired or you work from home, you might have more time to dedicate to your investments. This could allow for a more active approach. Finally, think about your personality. Are you a risk taker or are you risk averse? Your natural disposition towards risk can guide your investment choices. Are you patient or are you impatient? Patience can be a virtue in investing, while impatience might lead you towards trading. Are you disciplined or are you impulsive? Discipline can help you stick to a long-term plan, whereas impulsiveness might drive you to make quick trades. If you're a risk taker who's comfortable with volatility, then trading might be a good fit for you. It requires quick decision-making and a tolerance for market swings, but if you're risk-averse and you prefer a more hands-off approach, then investing is probably a better option. It allows for steady growth with less frequent intervention. The bottom line is this: there's no right or wrong answer when it comes to investing versus trading. Both can be effective strategies depending on your personal circumstances. The best approach for you is the one that aligns with your individual goals, risk tolerance, time commitment, and personality. Tailoring your strategy to these factors can lead to better outcomes. So take some time to think about what's important to you and then make a decision that you're comfortable with. Reflecting on your priorities can provide clarity. And remember, there's no shame in seeking professional advice if you need help getting started. A financial advisor can offer valuable insights and guidance. So, are you more of an investor or a trader? Let me know in the comments below. Listen, whether you're a seasoned pro or just dipping your toes into the market, remember, knowledge is power. If you found this video helpful, hit the like button, subscribe, and share it with others who want to learn more about investing and trading. And don't forget to turn on notifications so you never miss an update. We're delivering market-moving insights straight to your feed because here, we're all about making money.